Good afternoon. Welcome.
Good afternoon and welcome everyone. We're going to give you all a few minutes to log into our webinar. We're excited that you're hearing us today. Just a few housekeeping things. If you do have questions, please be sure to put them in the Q&A box rather than the chat box, because oftentimes your questions will get lost in the chat, because I do get a lot of private chats about some basic housekeeping information. So make sure to use the Q&A if you want your question answered.
Perfect.
And again, we're just allowing a few moments for everyone to log in here. Hello, Bijan, and welcome. Hello, Chelsea. Sees here. You're most interested in how to get forgiveness and how to document that. Panelists, are we going to be covering that today?
How to document?
How to apply for forgiveness and get documented. I'm not quite sure what they mean by the documented. Hopefully they'll put more information in the Q&A.
Yeah, we'll touch on that. We'll explain the documentation, retention, and things like that.
Perfect. Thank you, Tom. All right, we're still waiting for a few more attendees. We had quite a few register. So just probably a couple more minutes to let everyone log in. For those of you who just joined us, some reminders: use the chat box. If you just have a quick comment, that's perfect. If you have a comment about housekeeping information, just let me know. You can use the chat box for that. However, if you have any questions for our panelists today regarding the information that we're presenting, please use the Q&A box. Otherwise, your question will likely get lost in the chat box. The Q&A really helps us to keep on track of the questions that we're answering. So please use the Q&A box. All right, and with that, we will go ahead and get started. I'm going to turn you over to Amber.
Thank you so much, Laura. Laura is always a great help when we do our series, our webinars. So thank you, Laura, for always getting us started. Good afternoon and welcome, everyone. Hopefully everyone's settled in to listen to us talk a little bit about our new COVID-19 relief funding for small business. Of course, our goal at the SBDC is to keep our business owners updated on the latest SBA guidance. Our discussion today is part of our COVID training series that we'll continue to offer the latest overview of the high-level overview of the latest updates. If we can go to the next slide. Thank you, Tom. So our topics today are going to all be around the new funding programs. As you can see, we're going to talk about the PPP loan, first draw and second draw, and forgiveness. Somebody mentioned forgiveness earlier. The EIDL program extension, targeted EIDL advance grant, debt relief program, grants for shuttered venue operators. The new funding is around Consolidated Appropriations Act and the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and the Venues Act. We just want to make sure that you know what we're going over today. We can move on to the next slide. Thank you. And of course, we have to read a disclaimer to make sure that you know that what we're presenting, the information we're presenting, is subject to full pending SBA implementation guidance, required regulations, notices, and revised forms. The information is changing rapidly. You guys know how that works. Every day something's changing, and it's based on our current understanding of the programs as we know them today. The official guidance documents, forms, and information can be found on SBA.gov and the U.S. Treasury websites that we have listed above here. Before we get started, we probably should give you a little bit of information about ourselves and who we are. Tom, do you want to give us a little introduction?
Sure. My name is Tom Fulcher. I'm a business analyst with Maricopa SBDC. Been here, I think, about 11 years. I work with small businesses at all stages, from startup through mature businesses, In addition to working disaster relief, also have some specialties. I'm a certified global business professional, which means I can help with export, and work a lot in the equity capital space with venture and angel capital, and have a long background as a strategic marketing director and VP. So happy to be here and thrilled that we can share this information with all of you. And Amber, if I can add one thing before you introduce, let's just make sure everyone, if you do have questions, please use the Q&A tab. We're going to rely on that tab to answer questions, not chat. So please enter your questions in Q&A. Back to you, Amber.
Thanks, Tom. I appreciate it. I always enjoy working with Tom. He has such great experience and he's fun to work with too. So I always appreciate that, Tom. My name is Amber Kellogg. I'm an SBDC business funding analyst with the Maricopa SBDC Center. We're a resource for small business financial literacy. We help guide, educate, and support business owners on being financial leaders of their business. Before working for the SBDC, I worked in the lending world with JPMorgan Chase for about 10 years. Prior to that, I worked in business management with Limited Brands, which if you guys are familiar, it's Victoria's Secret and Bath & Body Works. I was able to alternate between the two divisions for about 14 years. Within that time frame, they moved me to 7 different states to head up different stores and districts, and that was really cool. But about 13 and a half years ago, we called Arizona home, and I love it. I don't want to move. This is great. I do have a passion for helping business owners flourish, and I know what sacrifice and dedication it takes to succeed in business. And I'm happy to be a part of the discussion today. So thanks for welcoming us. We would like to tell you a little about the Maricopa Small Business Development Center. We see SBDC, but I guess we should let you know it's a small business development center. We're part of a powerful statewide network, which is America's SBDC Arizona, which is accredited by the nationwide America's SBDC. Maricopa SBDC is funded in part through a cooperative agreement with the U.S. Business Administration and hosted by Maricopa Community Colleges. You'll see our center's offices are typically in the colleges. Right now we're working remotely, but we do enjoy productive partnerships with the City of Peoria and Arizona Commerce Authority as well. Understand our mission is to guide, educate, and support business clients, as I mentioned a minute ago, and our pre-venture clients who simply have an idea to businesses just starting out, as well as long-standing existing businesses. Our no-free counseling helps focus on launching, growing, and sustaining small businesses. Let's see, our team of business analysts have an extensive experience in many industries, as well as technical assistance in the areas that you see listed here. Don't worry if you don't see your industry listed here. We have a wide range of resources that will provide assistance. And this made me think of, Tom, wasn't there a commercial before that said, hey, we have an app for that? And in my head, I was like, oh, we have an analyst for that. So anyway,
absolutely.
So we have an analyst for your industry. Don't worry about it. The Maricopa SBDC also offers research and training programs with access to tools and resources to help your business development. Those tools you can see on this slide are an example of the valuable resource that we provide. As business owners, we know that it's important to have resources in our toolkit. And part of that toolkit is Growth Wheel, which helps business owners focus on specific aspects of your business. Live Plan is another source that we use to create a business plan that follows SBA approved format. It's very fast and simple, and it's an effective way to document your business ideas. Profit Sense is a financial analysis tool that your advisor, your SBDC counselor can help you with. SBDC.net is a resource that we're able to access that gives us numerous reports with critical information such as marketing, intellectual property protection, trademarks, copyrights, patents. That's just to name a few. And last but not least is IBIS World. This gives us industry research on thousands of industries worldwide. And this helps business owners make informed decisions. So those are just a couple of tools that you have access to when you work with an SBDC counselor. All right, so today our first topics will be around the Paycheck Protection Program. That's what PPP stands for. We're going to discuss today first draw, second draw, and forgiveness. That's going to be our first topic. So the Paycheck Protection Program is a loan that was designed to provide direct incentive for small businesses to keep their employees on payroll. The SBA will forgive loans if the forgiveness criteria is met. So your first draw, businesses that did not apply for funding in 2020 may now apply for their first time. The second draw, businesses that received PPP funding in 2020 have used or will use PPP funding that was received may be eligible for the second draw round of PPP funding. And so just keep in mind the PPP is open for first and second draw applications. The deadline is March 31st, 2021, or until the funds are expended.
And Amber, if we can just make sure everyone understands that deadline, it's not an application deadline. March 31st is a deadline by which the SBA must have approved your loan, issued an approval number. So that means you can't go into the lender on March 31st and apply. So, applying earlier when you're ready after you've received your counseling with your assistance with your SBDC counselor is best.
Yeah, absolutely, Tom. And we've just been telling everybody, don't wait, just do it, because it's until March 31st, but it does take time to get that loan number that you were just saying. It takes some time for them to even get to that process. So, and I know that clients have asked me too, Tom, if they can apply for the first draw, then apply for the second draw simultaneously. But I just want to add the point to remember about that is that the rules do state that the first round of funds need to be used or plan to be used before doing the second draw. But that's also about timing, because if you get the first draw and use it within the 8-week time frame, then you may still have time to apply for the second draw. But again, you have to make sure that you have all of your ducks in a row. What advice have you been giving the clients on that topic, Tom? Have you been getting that same question?
I have been, and there's not a lot of exact clarity, but you have to have your first draw before you get the second draw. Now, the utilization is funny. It's use or it will use. So to me, you don't have to have finished it. And let's also clarify, and this maybe comes up later, use your loan is not the same as have it forgiven. Okay, so I had a client that got, let's say, a $70,000 loan and they had $600 remaining. Yeah, they got 70,000 PPP. They had $600 that wasn't forgiven. That's okay. They used it. They weren't forgiven. So that's the difference. So yeah, you probably need to have your first draw dispersed before you can consider applying for a second draw.
Yeah. Thank you. I know that's a common question. Thank you. All right. So the what businesses are eligible to apply for the first draw? The newly eligible list is housing cooperatives, which is 300 or fewer employees. That's a change. Designation marketing organizations, the DMOs, are 300 or fewer employees. So that's tourism boards, visitors bureaus, for example. The certain nonprofit 501c6 organizations, such as chambers of commerce, eligible news organizations, and those that are still eligible are business entities, the partnerships, corporations, LLCs. That's not changed. Sole props, independent contractors, self-employed individuals, 501c3, which are nonprofit organizations, 501c19, which are veteran organizations, and tribal businesses. Those are the ones that are eligible to apply for the first draw. So let's see, I wanted to point out, these are to be eligible, a business must have been in operation on, it says on or before February 15th, 2020, and may not have been permanently closed. And I did just want to point out, being in operation or being, it must mean be active. You must have made a profit. You must have been payroll, not that you just registered for your Arizona Corporation Commission prior to February 15th. That doesn't mean you've been in business. You must have been in operation before that time frame. Was an eligible self-employed individual, independent contractor, or sole prop, which is with no employees, or had employees from whom salaries were paid, or payroll taxes, or independently paid contractors. Now, for seasonal businesses eligible of operation any 12 consecutive period, it has to be consecutive, between February 12th, 2019 to February 12th, 2020. That is a consecutive time. Laura, is there any questions over anything that we've covered so far?
I do have one quick thing, Amber. If you could go back to the last slide. One person was wondering if they could capture that last bullet point. for eligibility, I believe. Some other questions that we do have, some were wondering what the deadline is for the easy form.
Yeah, that we'll get to that in the forgiveness section. Right now, we're just in the application
Perfect.
section.
Perfect. And then we did have another question. This sounds like it's kind of specific to their business, so they might be best submitting a request for counseling to speak one-on-one with their counselor. But just in case, if you guys had any, tips or advice on the subject of the application submission, this person submitted their first draw on the application to the bank over a week ago. They have not submitted it or even looked at it yet, meaning the bank. Should they consider submitting it to multiple banks, and can they submit the application to the SBDC directly myself?
You have to go through a lender. One, let's make sure we say that. And I would just recommend not doing it to multiple banks because, well, that doesn't mean that you're going to get multiple loans, but once you submit it to a bank, there is a process behind that. It shouldn't take a week. There should be some sort of communication. I would be very adamant on contacting them. But I will say, if you do go somewhere else and you get the loan in 2 days, if that other bank finally does, stop, dragging their feet on it and it gets submitted, it will just be bounced back. It won't have any burden on the fact that you got approved somewhere else. But I wouldn't recommend applying multiple places. Tom, what do you think?
Oh, no, I agree. It does tie up, if it gets out there, it could potentially tie up funds temporarily that others are trying to access. Don't know why they are not communicating or doing anything with you. We're hearing lenders issuing loans quite quickly.
Mm-hmm.
We know some lenders are prioritizing their own account holders first.
Yes.
So if you're applying somewhere where you do not have an existing relationship, you may consider applying somewhere else. You might withdraw if you can't get any answers. And certainly, talk to your SBDC counselor. They may have other recommendations for, community financial institutions, community banks, others that are maybe more happily accepting of new clients or don't even require an account relationship.
Mm-hmm. And they're a little bit quicker on their feet too. Because a lot of the banks are honestly got inundated from the first round. And so this time they're trying to make it a little bit more efficient, but a lot of them are dragging their feet. If I could just remind everyone, any questions that you have, please put in the Q&A opposed to the chat, because the Q&A is where we're able to look at the answer or look at the questions and be able to pull them up as we answer them. So if you did put some questions into the chat, if you could just copy that into the Q&A, because that's where we're going to be addressing questions. Okay. Let's see, we talked about the eligibility rules on the first draw. No, we didn't talk about this yet. So the eligibility of the applicant, let's see, the 12-week period we talked about. The last part of that was partnerships are eligible and file in one application as a partnership. That was the last little part of that, that slide we didn't get to. So where to apply? Someone had said, can you apply at the SBA directly? Here's where to apply. You can apply through SBA through a PPP through SBA approved lenders. And if you go to the SBA website, there is a website of Arizona preferred lenders for the Paycheck Protection Program. So that gives you a list of lenders to choose from. So just so you know, there's also a lender match option, which is kind of a cool free online tool with the SBA that gives you approved lenders, but that's only with a PPP. You shouldn't use that if you're looking for the SBA EIDL loan, which we'll talk about later, but that's just another cool tool. But if you go to the SBA website, they can give that to you, or just partner, like Tom said a minute ago, partner with your SBDC counselor, and we can direct you to someone that is a good fit for you. But keep in mind, this kind of goes along with what a question a minute ago, that you're not required to use the same lender that you used for the first draw if this is your second draw. But I sat on a meeting yesterday with the SBA listening, and they just said that they've been strongly encouraging their business owners to go to the person that you went to your first draw with, because they had easy access to your information. So that's something that I'll be using as a best practice to share with our clients. But like the client who mentioned a minute ago, if they're dragging their feet, I would possibly move on, because I've heard of, like Tom said, people can get their funds within a couple of days, and that's really what you're looking for. So if you're not having a good experience with whoever you went with your first draw, then maybe that's the time I would go to a different lender. But if you don't have to, I would go with the same lender, because they have your information. And we'll talk about the information you'll need for those applications here in a moment. So right here, this is the 2 application forms. Here's a quick look at the 2 applications. It's just a snapshot of the first part of the application. They are very short, but I just wanted to take a look at the first draw, the one that's on the left. The top is the basic information of your business, right? Your name, your, that kind of thing. It does ask you for an NAICS code, which is your Northern American Industry Classification System code. It asks for that at the top, so you need to make sure that you have that handy. It asks you for your average monthly payroll. Then you have to do some math in the next box and multiply that by 2.5, and then enter your number of employees. That's what we have highlighted under the first draw application in the red. The second draw application on the right is similar to the information that you have on top as far as your business, until you get to the calculations part. Then it differentiates the ability whether you use the 2.5 multiplier or the 3.5 multiplier for the businesses that fall under that NAICS code, or the NAICS code of 72. Allows you a little bit larger loan at 3.5 multiplier. The next section asks you to calculate the 25% reduction as well. That's the last box on the right on the second draw, from which quarter the reduction was and which quarter you're comparing it to. This comparison is in any quarter in 2019 or 2020. Just be sure that you keep the documentation. Somebody had mentioned what documentation and what you need to do with it. You have to keep that documentation you use for these calculations, because you have to prove that when you apply for your forgiveness. And I believe that there's timeframes too, Tom, for a different, so for the calculations, the 25% calculation, is it 3 years or 4 years?
I'm not sure I understand the question.
The documentation we have to keep, is it 4 years?
Yes. Well, for any of the PPP loans, you have to keep any payroll expenses for 4 years, and any other documentation for 3 years. And that time frame starts at the end of your forgiveness, when you're given forgiveness, or when you've paid off your loan, whichever is later.
Good point. Good point. You'll hear us say a few times, keep your documentation, or make sure you hold on to your documentation. So just remember, 4 years is a good length of time to keep it.
Yeah. And just to highlight a couple of things on these forms, it's kind of funny. I keep meaning to ask the SBA why it's done this way. They've got all these boxes you can check, yes. But LLC doesn't really inform your lender, because you don't file as an LLC. All of this is reliant on your tax filing status, and these are more entity statuses, so it's a little unusual. And then, of course, the quarterly, we'll talk a little bit more about what quarters you can use. This is an SBA application. This is a great place to start and practice with your advisor. However, when you go to the lender, they'll have their own form that will emulate this. So this isn't the actual form you will turn in.
Yeah, and that was my next point, is just to make sure if until your lender either gives you access to the form, it's nice to have this form filled out, or at least have all the information, because when they give you their form, you could just transfer the information and you're done, and you don't have to do it a second time. Just do it in advance, and I think that's a good best practice too. But looking at these apps, it made me think of a good point to have your documents together prior, just so you're not scrambling at the last minute to pull everything together. So another good reason to have your previous lender, if you're doing the second draw, use your previous lender, because they could provide you with your loan number, because that's something you're going to need if you're doing a second draw. You're going to need your loan number. But I think it's a good idea. We should have created a list, Tom, of I'm realizing we didn't create a list of items that you'll need for the loan, but if you look at the application, it'll give you a good idea of all the things that you'll need for that.
And I do have a list I can share as well.
Okay.
Also your NAICS, that's going to be asked. If you're not sure what your NAICS is, your North American Industry Classification, It's on, if you are filing as a business entity, it is on your tax filing. It's right there. Otherwise, you might have to check some of your documents on other places where you've had to provide that. And in a worst case, scenario, again, talk to your counselor and they can probably help you figure out what you're down as. But we'll talk more about that on the second draw, the importance of NAICS and probably the consistency of first draw to second draw with that.
Yeah, thank you. All right, so the eligible use of funds. So at least 60% of the funds must be used for payroll purposes to be eligible for forgiveness. And of course, our goal is to have as much of the loan forgiven. So to do so, we must use the following guidelines. We have to use it for salary, wages, commissions, or similar compensation, cash or tips equivalent, payment or vacation, parental family leave or sick leave, allowance for separation or dismissal, payments for employee benefits, group health care, group life, disability, vision, dental, including insurance premiums and retirements, payments of state and local taxes assessed at compensation of employees, for sole props or independents, sole proprietors, I keep saying sole props, it's sole proprietors or independent contractors, wages, commission, income, net earnings from self-employed or similar compensation. That's what we need to make sure that we are using as eligible use of funds, and 60% of that at least must be. Now it could be 100%. You could use all of your funds towards this and you'll be 100% forgiven, but at least 60% needs to be towards any of these things listed here. So the other expenses, now that we've spent at least 60% on our payroll, the rest can be used on essential expenses, such as rent and mortgage, interest, business and personal, utilities, and there is a specific list of utilities, by the way, interest on debt obligations incurred before February 15th, 2020, covered operations expenses, covered property damage. And actually, I wanted to point out with the property damage, that has a lot to do with anything that the property damage that was incurred during like the rioting or any vandalism or looting from damage from 2020 that was not covered by insurance or other compensation. So we want to make sure that we point that out, because it's not, if it hailed, which it did hail the other day, but if it hailed, that's not the property damage we're talking about. We're talking about from rioting, vandalism, or looting that's not covered by insurance or compensation. But covered supplier costs, covered worker protection expenditures is the last one on the list here. So now that we know that 60% must go to payroll, and now we know that 40% must go to the business expenses, we're going to calculate how much our loan amount we can apply for on our next slide.
And just so you know, beyond just the forgiveness side of this, these things that Amber's just covered, this is how you can use the funds, period, whether or not it's forgiveness. It doesn't mean, well, I won't get forgiven, but I'm gonna buy a new boat. So this how, and personal property, I've been asked this a couple of times, it's a confusing statement. Personal property means just not real or real estate property. So maybe it's the rent, the lease, or the interest on a company vehicle used for company purposes.
Very good. Laura, do we have some questions pertaining to what we just talked about?
Yeah, so just a quick question. One person was wondering, for 1099 workers, do they also have a NAICS code?
Well, a 1099, it depends what industry they're working within. So a 1099 is obviously not an employee. Anyone who's on 1099 needs to apply for their own PPP, and it just depends on their industry within which they work.
Thanks, Laura. Let's see, so we're going to calculate the loan amount. And I know that this is one of the common questions that we found that our clients need the most assistance on. So we did make a quick 5-step guide to help you with the math part. Now I know that we wear many hats as business owners, and I know that we don't like math a lot of the time. So math probably isn't one of everyone's favorite, but we're going to walk you through it and give you an example. So we're going to put our student hats on and try to learn how this math works. It's always good to have your documentation in front of you so you can kind of plug in the numbers, but we'll be able to see this at a later date. I believe the slides will be accessed to you guys also, but now we got to put on our student hats and do these. So I totally was going to have a cool hat to put on, Tom, because I know that that's kind of a fun thing that you do sometimes, but I realized I don't have a cool hat, and I was kind of having a good hair day, so I didn't want to mess up my hair. So I didn't grab a student hat today, but hopefully everyone can put on their student hats. But step one, we're going to determine aggregate payroll cost using a base period of either 2019 or 2020. For employees whose principal place of residence is in the United States, you have to make sure that you say that. For seasonal businesses, those dates may vary. It has to be in consecutive dates, though, just make sure. Our step two is subtract any compensation paid to any employees in excess of annual salary of 100,000. So if it's 120,000, you just use 100,000. Step three, we're going to calculate the average monthly payroll cost. So we're going to add them up and then divide it by the step two, divide step two by 12. So that's 12 months. Step four, we're going to multiply the average monthly payroll cost from step three by 2.5. And this is for the first draw, 2.5. Step five, we're going to add the amount of the economic injury disaster loan that you wish to refinance. If you received it from January 31st, 2020 to April 3rd, 2020, do not include any EIDL advance that's received. That's not what we're going to do on these steps. So on our next slide, we're going to go over a couple of examples, because I know that that math was probably overwhelming, especially when you read it. I like to see formulas. So, you know, but when it's word problems, it's a little bit harder. So we're going to give you a couple of examples. Hopefully this gives you some number problems opposed to just the word problems. So in our example number one, the aggregate payroll cost from either 2019 or 2020, we used 120,000. Okay. Our step two was subtracting the compensation, any employees in the excess of annual salary of 100,000. There wasn't any to subtract in this one, so it's still at 120,000. Step three is calculating the average monthly payroll cost, and then we're going to divide the amount from step two by 12. Again, that's 12 because it's 12 months. That number gives us 10,000. Step four, we're multiplying that 10,000 by 2.5. which gives us 25,000. Now, step five says anything that you receive from EIDL or economic injury disaster loan, we add it in there, but we're not going to refinance anything from our EIDL, because let's say in this example, we didn't get one. So our maximum loan amount that we can request is 25,000. Okay. So in our example two, we start at 1.5, and the and then step one is 1.5. Step two, subtract the compensation. So it looks like they subtracted 300,000. So we're down to 1.2. Step three, we're calculating the monthly average payroll cost and divide by step two by 12. So that gives us 100,000. So that's kind of easy math. So what 1.2 divided by 12 gives us 100,000. We're dividing 100,000 by, multiplying 100,000 by 2.5. That gives us 250,000. In this example, example two, we are not refinancing any EIDL. So that gives us a maximum loan amount of 250,000. So hopefully those two examples gives you an idea of what what calculation you need to do. As every business is unique, each of you probably have a ton of questions with this one. We encourage you again to partner with one of your SBDC counselors. If you don't have one, let's make sure you get one. But keep in mind, we can't give accounting advice, but we're pretty good at math. So we can help you with these numbers and plug in that formula. So just keep that in mind as well. So we wanted to just point out a couple of differences in self-employed and seasonal calculations, because I know some of our business owners fall into these categories. Income from self-employment, if you file a 1040 and a Schedule C, if no employees, you follow the same basic calculation, which is step one, you refer to your 2019 or 2020 Form 1040 Schedule C, line 31, which is your net profit amount. If the amount is over 100,000, you reduce it to 100,000. Remember, that's the cap, 100,000. Continue with steps 2 through 5 to determine your loan amount. Now, for seasonal employees, it is the same basic calculation process. For step one, use the total amount payroll for any 12-week period you selected. beginning February 15th, 2019 and ending February 25th, 2020. I think that's a typo. I think it has to be February 15th, 2020 on that slide, but continue to steps 2 through 5 to determine your loan amount.
And just to add to that, Amber, for the Schedule C filers, and I believe this applies to Schedule F as well, if you also have employees, in other words, you have payroll in addition to line 31, that can be added. So this line 31 is for the owner, but if you have payroll in addition to that, that is additive to this.
Good point. We probably should add with if employees would be another line we could add, so we could do that. Yeah. Thanks for adding that, Tom. So our supporting
Amber, I'm gonna go back also because we may have some S Corp filers, and it's a little quirky there. Many S Corp filers feel they are self-employed. You're not. You actually work for the corporation. So as owners, you have to look at your payroll, not distribution and draws, right? So you have to look at payroll. All those other items that were in the group items, group health, group provision, group dental, life, disability, you don't add those separately. They are considered a part of your cash compensation. So that should be included when you analyze payroll under that 100,000 cap.
Very good. And you know what? I wish I could remember where I read it, probably one of our SBA calls, but I know SBA and the IRS has a cooperative kind of list or kind of a table of some sort that lists every, like if you're this, then file this way, or if you're this, then do this. So I wish we had that table. That would be really cool to access, but I know
we do have a couple documents from the SBA, how to calculate your first draw and how to calculate your second draw. And I don't know, Laura can tell us at the end if they've been put on our site or not, but those are available.
Yeah, those are really great tools. I just wanted to point that out. Tom is really good at always making sure our team has access to all those tools too. And if you guys need help with that, obviously, again, contact your counselor, but you can also go online and find that table. It is a little bit confusing if you don't know what you're looking at, but thanks for adding that to our last slide, Tom. Someone asked a little bit ago about supporting documentation. So again, I said we're going to say this a couple of times. We mentioned keeping your documentation, and here's the why. You're going to need to be held accountable to provide proof to validate those calculations that we just did in a couple of slides, and for proof of being in operation before February 15th, 2020 date. So be prepared to submit these appropriate documentations. They're listed here. I don't need to go over all of the bullet points, but these are examples of tax forms, quarterly wages, payroll. If you use like ADP or something, you can get a printout or a statement, your payroll statements, any kind of documentation that can prove that you had that much payroll. You'll have to have that proof when you do forgiveness. So the PPP loan terms, my hat when I used to work for the lending world, I laughed because when we look at 1% rate, the rate is like free money, and there's no such thing as free money. But in loan terms, the interest rate here is 1%. Just keep in mind that interest is deferred, but it is still accruing during this deferment period. So we want to make sure that, yeah, it's 1% and it's deferred. I don't have to pay anything right now, but just keep in mind it's going to get you on the back end. The maturity date is 5 years. There is no prepayment penalty, and payment and interest, the interest accrues again from the date of disbursement. So we got our money today. It's going to start accumulating accruing that interest. There are no payments on principal interest are due until the date on which the SBA remits the loan forgiveness to your lender. So there's a date that you'll be notified that it's remitted to your lender. And for the PPP, first or second draw, there is no personal collateral or guarantee. So keep that in mind. And I also wanted to add that there is no credit check for the PPP as well. I know that's been a question that I've gotten from my clients, but there is no credit check for that as well. Laura, it looks like we might have a couple of questions.
Yeah, we have a question just about calculating the PPP amount. So we
Okay,
have one person that, gave the scenario about multiplying by 12, then by 2.5. And then they were wondering if that does not reflect the monthly wage of their employee. Is there any other way to process the PPP amount to reflect his wages for the month? Does that make sense?
so it's an average of the 12 months. So
Right.
it's a monthly average.
They're just saying that formula does not reflect the employee's current wages. Is there any other way that they would document or process?
There's really not. It's confusing to me, Laura, because you'd rely on your 941s, your 940s, the things you've reported to IRS already that should reflect wages. And so, yeah, I'm perplexed. There is no other way. This is how you do it. You calculate that base and you get 2.5 months average. So
I would probably advise our client, Laura, with that question. I mean, maybe we need to take a look at it a little bit more in depth. So, I mean, we're happy to do that. That's what we do. At the end, we do talk about how to get an SBDC counselor. So that might be even just to answer a simple question. We still have to go through our process, but if it's a one-off question like that, we might have to take a look at what it is. I'm with Tom. I'm kind of perplexed at how the math doesn't work, but it may be a one-off. We want to make sure he gets help.
Another question is, are flea markets considered as being able to apply for PPP loans?
A flea market. I'm not sure what NAICS code that would fall under.
yeah, I would presume so, because it's a small business. It's a private small business. I'm assuming the person asking that. So I would say it's likely yes, as Amber said, meet with your counselor and we can explore, but I don't know of anything that would forbid that.
Mm-hmm. If it's an LLC, if it's, I mean, any of those things that we listed, if it's registered, if you could prove that you've been in business, those kinds of things, I wouldn't see why not. And in fact, yesterday, it was another thing I got from that SBA call was that everyone should apply. If you were a business and you were in business prior to the 2/15/2020, then you should definitely apply. The worst they can say is no. But if we wanted to table that and get back to somebody, we could certainly do that. Or they want to, we can maybe answer that question and table it.
Yeah. And Laura, we've got about 18 minutes remaining, so we probably need to proceed and pick up pace a little bit to make sure we can present everything and get back to questions toward the end.
Perfect.
Thank you, Tom, for keeping us on track. We should be on to the second draw now. We've gotten our first draw loan, and what do we do if we need more funding? Well, guess what? We apply for the second draw. It allows you to borrowers to previously got a PPP loan for a second PPP loan. So that's what we're going to be talking about next. And I'll try not to be too much of an auctioneer and read fast since we're in the time constraint here, but the eligibility is if you received a first draw PPP loan, then you are eligible to receive the second or apply for a second. Use or will use the full amount or authorized for the authorized uses from the PPP-1, has no more than 300 employees, and that you can also demonstrate a 25% reduction in gross revenue between those quarters we just discussed from 2019 and 2020. Now, a quick calculation reminder, here's the calculation. Our friend who asked that calculation question, maybe he could screenshot this and just keep in mind that the cap, just so we know, or so we're clear, this is the first time we're mentioning it, up to $2 million is the maximum amount that you would be able to get. So let's see, revenue reduction proof, again, with a proof of documentation in the spirit of ensuring we're maintaining integrity, because we need to make sure that we keep all of this proof, right? We're gonna cross our T's and dot our I's. We need to make sure we're covering ourselves. When we're applying for these loans, we have to have proof. So if your loan is $150,000 or less, documentation is not required at the time you apply, but documentation will be required when you submit your loan forgiveness. But you have to make sure that you have that documentation. So don't just say, oh yeah, I got it. I reduced 25% or greater reduction, or experienced 25% or greater reduction, and don't have documentation, because they're going to ask you to prove it. Okay. The second draw calculation is very similar to the first. And here we go doing this math again, but don't worry, we're just reinforcing what we showed you previously. And you see that the calculations are pretty much the same, except for the very last step. There's step 4. Step 4 is for the NAICS codes of 72. You get to divide by the multiplier of 3.5. So for seasonal and NAICS codes of 72, there's a different multiplier. So just make sure that you keep that in mind when you're doing your calculation for the second draw. Forgiveness rules, we're just going to review that you need to make sure that you get fully forgiveness. You need to make sure that you follow the guidelines here, and we know how to calculate the loan. We want to make sure that we are within our perimeters, because I'm looking for that 100% forgiveness, right? So I want to make sure that I don't have a loan at the end of here, even though it's just 1%. I want to make sure that I get as much forgiven as I can. So these are the things that you need to make sure that you do. Employee compensation levels are maintained. At least 60% of your funds were used for payroll purposes, and then 40% is used for those other business expenses that we defined earlier. Now, the loan forgiveness covered period, we want you to keep in mind that borrowers can now choose the length of the covered period between 8 and 24 weeks from the date the funds are dispersed. Now, the EIDL advance is no longer deducted from the forgiveness amount. That was part of the new regulation as well. So we want you to keep that in mind. And I believe Tom talks about that a little bit in a couple of slides here. Here's just a few forgiveness reminders to make sure that we keep if the 8 to 24 week covered period, employee compensation levels are maintained. So that's pretty much the same as the first draw. Loan proceeds are spent on payroll costs and other eligible expenses. 60% of the proceeds are spent on payroll. You have up to 10 months, and I think Tom said this a minute ago, you have up to 10 months from the last date of the covered period to apply for loan forgiveness. Just keep in mind that if you do not apply for PPP loan, payments are no longer deferred, and borrowers will begin making loan payments to their PPP lender. So the lender will let you know when those, should let you know when those dates start. So for those that haven't already applied for forgiveness prior to the recent changes and had an EIDL advance subtracted from their forgiveness amount, we want to know what happens. Well, I'm going to ask Tom as well, but if it's true, the SBA, I believe, will dispersing the lenders who already got their EIDL advance taken or subtracted. The SBA will reimburse the lenders, and the lenders will reimburse the consumers.
Yeah, there's lots of scenarios here. You've got your EIDL loan, you haven't applied for forgiveness. I'm sorry, you got your PPP loan, you haven't applied for forgiveness yet. Don't worry about it. You got the new rules. You've got your loan, you've applied for forgiveness, it's not processed. The lender should take care of that for you. You've got your loan, you've applied for forgiveness, it's processed, and you have just the remaining EIDL advance left. Again, nothing you need to do. The SBA will work it out with the lender. You'll be forgiven the rest of that, say $5,000. Trickiest one, let's say you got the loan and you got your forgiveness and you're only making payments. And say it's $5,600. $5,000 was the EIDL advance and $600 was just non-forgiven proceeds. Well, the $5,000 part and its associated interest will be taken care of. The $600 part and its associated interest remains a loan, and it'll have to be corrected in paperwork. So yes, the SBA is going to take care of it all with the banks automatically, but we don't know the timeline. And when you ever hear the word automatically, with my little air quotes, on this or debt relief, don't assume it is. Have that relationship with your lender, pursue it with them, talk to them about it, and understand where things are.
I think that's a great point. And I did also want to point out too, that another good point to mention about the PPP is that it's not counted as income on your taxes. And again, we can't give tax advice, but I've had that question asked me as well from our clients. So just make sure you discuss that with your CPA or your accountant during tax time. But
yeah, it was repealed on December 27th when President Trump signed the new act that previously, although PPP loan forgiveness was not taxable federally, the expenses which they covered would not be allowed to be deducted. They now are allowed. Mm-hmm. The little caveat I'll throw in here is every state may operate differently on state taxes. In the state of Arizona, we are a static conformity state with the IRS code. What that means is we've set a date and every year they update that date. Technically right now, we're not in compliance with the latest federal tax code. So these could be taxable, but the Department of Revenue has issued forms assuming compliance. And I actually heard from them this morning that if it doesn't pass the legislative session, which is current session, supposed to be updated, that then they'll go to late 2022 and do some corrections, I guess. And let's just hope it doesn't get to that. Usually our legislator passes it every year and we'll be in conformance, so we won't have to worry about the issue of taxes on a state basis on these.
Thank you, Tom. That's such great information. I think you're going to talk about EIDL next.
Great. So economic injury disaster loan, we'll go through these a little quickly. So program purpose, everyone's aware of this already, to meet financial obligations that could not have been met except for the pandemic. The interest rate is 3.75%, 2.75% for nonprofits. It's 30-year loan with a 1-year deferment on the first payment and no penalties, etc. So this was extended through December 31st, 2021. It's for businesses that are 500 or fewer employees, including sole proprietors and everyone else you see listed there, and private nonprofits with 500 or fewer employees, faith-based organizations, etc. And the applicant business must be physically located in the US and in operations by January 31st of 2020. Lots of things here. And like I said, you'll be able to see this later, so I don't want to read a bunch of data to you. Basically, be careful with some of these. Don't double dip. If you're covering your payroll with PPP that you're going to get forgiven, you can't also pay it with EIDL. So just use it for different things than what you're using PPP for, and you'll be fine. And although I said the EIDL was extended, it wasn't a new program. So while it's not been in writing, if you've already gotten an EIDL, don't assume you can get a second EIDL. It is highly unlikely you'll be able to get a second EIDL loan. The application is open at sba.gov. Looks like this. It's a very easy application to complete. A little bit of paperwork. It tells you up front what you should have to complete the application. And it is directly with the Treasury and no lenders involved. And it just kind of shows up magically in your bank. You'll get you invited to a portal to sign the loan documents. And then once you've signed those loan documents, it'll be deposited into the bank account you've provided. I want to back up for a second before we talk about the EIDL Advance grant. So a lot of questions around the EIDL Advance. Until about 4 days ago, a lot of us, including some local SBA members, thought the traditional advance was also extended. It was not. So the EIDL loan is still there, but no EIDL Advance. Instead, the new bill introduced a targeted EIDL Advance grant. Now, why they had to name it that instead of something less confusing, I don't know. We're waiting for more guidance on this, but it is for companies that previously received an EIDL Advance, and I'm not sure if we have another slide on it. So yeah, so you've gotten an EIDL Advance and you did not get, you got an EIDL loan and you either got a small advance or none. So the first priority group are those that demonstrate a 30% reduction in revenue beginning March 2nd of 2020 through the end of the year and located in a low income community. So, and did not receive $10,000 already. So if they're in that, that's the first priority group. And what will happen is if you got zero, you got the loan, but you got zero advance, you can get 10,000. If you got 5,000 in the advance, you can get 5,000 in this grant. If you got 10,000 in the advance, you'll get zero here. There is a second priority group out there, and that's not necessarily demonstrating in the low income community. It's just those that got an EIDL loan that did not get the advance at all. They're the second priority group, and they can still get $1,000 up per employee up to 10. We don't know when that will happen. The SBA is going to be reviewing their EIDL recipients and advances, matching it to census data, and outreaching to eligible grant recipients with instructions. I'm a little worried about that because what if your business is located in a low income community, but your mailing address that you submitted is not? So I'm not quite sure how this will work. So, stay in touch with us, meet with your counselor, and we'll try to help you through this. So you can get up to $10,000 when considered in combination with any advance you received previously. Some recommendations related to funding. Read all your loan documents and understand them. Keep all your loan application numbers and contact information in a safe place, whether it's physical or electronic or both. We talked about keeping detailed records and follow record keeping requirements that we've outlined. SBA Debt Relief Program. And we're going through these quickly because, again, we don't have a lot of information on these. We are waiting for official guidance. So I'll give you the kind of the basics. If you had a loan that was approved by the SBA by 9/27 of last year, and you received your 6 months of principal and interest payments covered by the SBA on 7A, 504, and SBA microloans, you're going to be able to qualify for an additional 3 months starting in February. Okay. If you're in that group and you're in a certain group of NAICS codes, and there's about 15 of them considered hardest hit by economically, you can get not only the 3 months, but an extra 5 months beyond that. If you get a new loan starting February 1st, you can qualify for 6 months of debt relief. The catch right now is anyone who got their loan, I don't mean dispersal date, but the SBA loan approval date of 9/28 to 1/31, you currently don't qualify for anything the way the rules are written. Now, I can't speak for anyone but myself. I expect that will change because there's no logic in you got your loan October 1st and everyone else before you and after you got help. That doesn't make sense to me. But right now, that's how it is written. Again, it's automatic, which means make sure you talk to your lender. Last topic, again, very quick topic, Shuttered Venue Operator Grants. This is NAICS Code 71, entertainment and recreation. So, performing arts, museums, motion picture theaters, talent agencies, etc. I don't know if we have, it's a specific grant. We're waiting for guidance. We have a little bit of information about how it'll work. It's basically up to 45% of gross receipts for a period of time. So it's much more lucrative than the PPP. And in fact, if you go for a Shuttered Venue Operator grant, you cannot get Paycheck Protection Program 2021. If you got it previously, that doesn't hinder you from getting this, but you can't get the new ones starting in 2021. We're waiting information. A lot of people are saying going to apply for one and hope for the other, but I'd be very careful. PPP is moving fast and we don't even have an application for Shuttered Venue. If you get your PPP, you're not going to be able to go back and get Shuttered Venue. So I wanted to do those kind of quickly. Sorry about that, but we can jump into Q&A. So first question we had, Amber, I'll let you address. What is the deadline for the EZ form?
I'm pretty sure the deadline is that March deadline.
Well, I think this is for forgiveness. So I think it's 10 months after your forgiveness period.
Yes, 10 months after the forgiveness period. I apologize. Yes.
No, that's okay. And Bijan has asked, do you suggest I apply for a second PP loan again through Chase, the bank that I applied the first PP loan, or other? And Amber, you shared that, and the SBA has offhandedly said, they already have a relationship. They already have your information. Probably best. Now, keep in mind, payroll has been expanded. So you don't want to just pick up the data you had because you might be able to get a few more dollars because of that expanded definition of payroll. Mm-hmm. And Amber, your advice, I believe, was if you're running into problems, non-responsiveness, et cetera, then, come see us and we'll help you get with somebody else.
Mm-hmm. Yeah, then I would move on. But if you already have an established relationship, it would behoove you to just maintain that one.
Yeah. So another question for self-employed people. So I'm going to take it by this, you mean Schedule C, a commercial auto monthly payment. So that's a maybe. So mortgage and rent, a lease for a company-owned vehicle is included, and interest on a loan for a company-owned vehicle. Now, if you're talking about a personal vehicle and you charge mileage back, I'd be leery of that. And I've seen nothing about auto insurance as a forgivable expense. I'm not sure, but.
Yeah, I'm not sure about auto insurance either.
I'll let you tackle this one, Amber. Somebody, mostly because I'm not sure I understand it. Someone said, how do you apply for the GIDL advance?
I'm sure it's an idle.
Oh, okay. It's just a typo. Got it.
Yeah.
Okay, perfect. So I guess I'll answer that. I just covered that. You don't. If you would qualify for that, you have to have gotten the loan. Then the SBA will be doing outreach to letting you know you've qualified. We don't know their timeline. And so, yeah, keep working with us. And someone else asked about, is EIDL forgiven? No, EIDL has never been a forgivable loan. It's a loan. And that's never been forgivable. Of course, the advance is a no repayment loan, so it is basically a grant, but the EIDL itself is never forgiven. Debt relief, there's no link I can send you. It is explained on the SBA website. Again, the debt relief, your lender, if it is an SBA 7A, SBA 504, SBA microloan, doesn't apply to a commercial loan from your lender. It has to be an SBA guaranteed loan. Your lender will initiate that. So talk to your lender.
Advice.
And Amber, someone asked about Form 3508S, the Simplified Forgiveness Form. You want to address that?
Sure, let me.
Just, is it available? Or they say it's not available, but it is.
Yeah, it is. All of the forms are available at SBA website.
Yeah, on our website. And so, yeah, it's definitely available. Again, just like the application, use the SBA's official form to practice, and your lender may have a specific application. So somebody named Anonymous said, I got an email from Chase that says beginning early next year, you can use the simpler 3508S. Okay, yes, the 3508S is out. I'm assuming they probably got that email last year. It's out. And if you qualify, and this is loans $150,000 and less, you can use the 3508S form.
Yeah, and honestly, if you Google it, it'll come up. I mean,
yeah.
If you Google that. Says there's no chance to apply for a second EIDL or EIDL extension loan along with the second PP loan, as I heard.
So again, it's tricky. We do not believe currently, and it's, Amber said, it's fluid. My comment is the only constant is change.
Yes.
We do not believe currently you can get another EIDL loan if you've already gotten one. Now, that is not gospel. It's never been written one way or the other by the SBA in any sort of guidance. That's just the implications that have been provided to us that, that you've gotten your loan already. You won't get another one. So, and I don't think there is anything called an EIDL extension. The program was extended, but there's no EIDL extension.
Yeah. Thank you. I think we answered all of those questions, Tom. Great job. I will say it's 2:03, and I just to close here. I know that there are. Let's see. There's so many things that business owners need to do. I mean, all these things that everybody has questions on, and I know that you don't know who to ask. Well, guess what? That's why we're here to help. Listed on this slide, we do have updated resources on COVID-19, our training events calendar. We encourage you to also follow us on social media platforms as well. At the top, there is a request for counseling link there. We encourage you to definitely do that so we can get your questions answered. In order for you to be able to talk to counselors, that's the step that you need to take. And then it goes to our operations team. They assign one of the counselors to us. If you wish to speak to either Tom or myself, put it in the comments section that you wish to speak to Tom or Amber. I do want to add just one other comment. One of my friends once told me that the only bad conversation is the one that we don't have. And so I just wanted to encourage you guys to let SBDC have that conversation with you and see what we can do to get your goals achieved for your business. And keep in mind that we're working remotely, but please contact us for your request for counseling. The last thing I wanted to share too is our, before we go, our webinars that we have listed here. The Building Financial Strength During COVID is January 28th. We have a Restaurant Resiliency one February 2nd, the Great Marketing Turnaround, the second and third session. Let's see, the second one is the 4th and the third session is the 18th. I encourage you guys to see those as well. And we also want to just thank everyone for their time and hope we added value to your PPP knowledge. And we look forward to working with you. And Tom, it's always great being a partner with you. And Laura, thank you so much for your help.
Yep, and just a quick reminder, we do have a survey as you exit this webinar. If you could fill that out, that'll help us get a better idea and understanding of your needs during this time. So thank you all for coming.
We appreciate you.